Yeah, with all that being said, let's just jump into it.
Yeah, well,
Zach,
Car, I want to say first, I'm really excited to be here because I remember when I was a student, I was at UCLA. I grew up here in Austin, and I was so passionate about Bitcoin. I was really wanting to get involved, to meet everybody kind of in the space here in Austin, and I came to the Austin Bitcoin Club
did
meetup.
you really?
Yeah, 2021.
Really?
It was in this room.
Oh, in the bull run.
Yep, exactly.
You remember
bull
that.
market energy.
Yeah.
And yeah, you were hosting, got introduced to a lot of people here, so it's
dude.
full circle
Did I
moment
meet you
for
at
me.
that time?
Yeah, for sure.
Was I nice to you?
You were.
Okay, great.
You were very gracious with your time.
You never know what you're gonna get. It's right. It's a toss up. Just how busy I am, but
there you go,
dude. Amazing. So yeah, let's start there. How crazy it is now to see where like Austin is as a Bitcoin capital of the world. At least in my opinion, I think it is.
I agree. You know, I think there's a lot of technical Bitcoin talent here. There's founders, there's Bitcoin core contributors, individual contributors to various like remote Bitcoin startups as well. You know, a lot of stranded energy, a lot of mining activity here in Texas. I think if Texas was a country, it would be like top 5 for hash rate on the network. So Texas is in pole place right now.
And Zach, like just you coming from, like you just described, you coming from college and then seeing it here and growing up here, like what does it mean for you just to be working at Trammell, like one of the biggest VC firms in Austin, and then learning from guys like Christopher and you know all those OGs? Like, what's that like, dude?
Yeah, it's awesome. I mean, it was a dream setup for me. My kind of story is, you know, I grew up here in Austin. I went to UCLA. I was studying business economics and entrepreneurship. In my econ classes, you know, we were learning this very Keynesian kind of framework on economics, like modern monetary theory, and it was all very sort of central planning oriented, and felt like something was missing, you know, in that whole process. And so I kind of rejected that those theories that I learned in college, but in hindsight was really helpful to understand how kind of the conventional, you know, state of economics thinks about monetary policy and that sort of thing. At the same time, I was getting really excited about the startup world. I fell in love with the startup world, and in particular, fintech. And I was like, oh, it's great that these fintech startups are abstracting away from what is a really clunky, dated monetary system, and you know, making it easy for people to send and receive payments, interact with the global financial system, and stuff like that. So when I found Bitcoin about halfway through college, it ticked a couple big boxes for me. The first was, you know, the Austrian School of Economic Thought that's kind of baked into the design of Bitcoin. That really appealed to me, and you know, led me down the kind of Austrian econ rabbit hole. And then on the tech startup side, it's like, oh my gosh, Bitcoin is really a step function improvement in that base monetary layer itself. So the abstractions away from this are going to be, you know, pretty amazing. There's going to be a lot of really big, important businesses that come out of it. So kind of in going down the Bitcoin rabbit hole, I also was exploring Lightning and the kind of startup ecosystem that was emerging on top of it, on top of the Bitcoin stack. And I knew of TVP. I thought their portfolio had, you know, a lot of my favorite companies in it. And I can kind of tell you the whole story about
go for it.
what TVP is, but I knew about the backstory, and so I kind of seeked them out, eventually meeting one of them at an Austin BitDevs event in 2021, and pretty much just pounded the table for the rest of my college career. You know, you guys got to bring me on, give me a chance, let me prove myself. And eventually they relented, they did, and that was an internship right out of college, and that was a few years ago. So I've been an analyst full-time for a little over 2.5 years. It's amazing. It's everything I hoped it would be. It's so gratifying to be, you know, contributing to Bitcoin, talking with really, really smart people, a lot smarter than me, learning from them. And yeah, it's amazing.
So one of the things that you created this year, or were a part of this year, was this emerging Bitcoin native venture capital landscape. Can you tell us about this, Zach? Just like a kind of a high overview.
Sure.
Yeah.
Yeah. So, you know, TVP is in a pretty privileged position where we see really all of the Bitcoin native startup deals out there. You know, all of the kind of venture backable early stage deals. And we knew just anecdotally that it was growing rapidly, and it has been over the last few years. But I think the market in general didn't quite appreciate that. A lot of the activity was very early stage, pre-seed, seed stage. And so we felt it was kind of our, given our unique position, we should put out the summary data and sort of educate the market on what's happening. And we initially did that in 2023. The data goes back to 2021. So now we have 4 years of data, and we track things like the year-over-year growth in deal count, dollars invested into the space, average round size and valuation across startup stages. And the data kind of speaks for itself. In the last 3 years, the year-over-year growth in deal count, the number of deals getting done, was 60% year-over-year growth, 70% year-over-year growth, and then another 30% year-over-year growth on top of that. And those first 2 years, if you guys remember, 22, 23, these were major down years in the spot price of Bitcoin. So it's actually not correlated to the spot price like a lot of people kind of outside the industry might think. There's really a technology story here. It's really the kind of expanding composability of the Bitcoin stack that's driving more startup activity.
So that's getting passed around right now, but they can go to the Trammell website and download that, right, as a PDF?
Yep, you can download it for free on the website.
How long did it take you to do that, dude? Was it like a while?
I'll tell you what, the kind of like data tracking, that's just an ongoing thing. As we see deals, we'll make sure that we put them into our database. But putting the kind of insights together, working with our design agency to make it look nice. And then for me, TVP really is a startup, so we kind of all wear a lot of hats, right? So I'm not just on the investing side, but marketing, operations, capital formation. So it fell on me originally when I was an intern to do all the marketing for it, to reach out to journalists.
Wow.
And I was trying so hard to get these kind of like TradFi journalists to cover our research early on. And finally, this past year, I was able to get some folks like CNBC to talk about it, to get the word out. But yeah, it's a lot of work, but it's important, and it's, I think, kind of like something we can offer to the Bitcoin startup world as a whole. Other Bitcoin venture firms, when they raise capital, they can say, look, this is a massive breakout category. This isn't just a small kind of subset of crypto. It's actually rapidly growing as a share of crypto.
Yeah, and it's not like you could just grab it from like PitchBook or something, right? You have to be in the ecosystem to understand it.
Yep. Yeah, a lot of these rounds, especially pre-seed, don't really get announced publicly. Maybe I should probably touch on that. One of the cool insights from our last research report, in my opinion, was the year-over-year growth in pre-seed activity was 760%. So massive, massive growth at the very earliest stage of startup activity. There's always kind of a drop-off rate in the number of companies that graduate from pre-seed to end up raising a seed round and then Series A and beyond. But that's kind of in my opinion, it's a great early insight on what's to come. There's a lot of activity at the earliest stage. There will be some drop off, but more will come at the seed stage, and so on and so forth.
Because talk about that, Zach. I don't know if you have the number for it, but what's the percentage for these pre-seed Bitcoin companies, or just Web 5, Web 3, whatever, getting to a seed stage? Is it as good as the regular technology space, or is it, what is the batting average on that? Do you know?
I don't have it off the top of my head. There is a very, very high failure rate in the startup world in general, 70, right? 80%. Within the Bitcoin native space, I would say if you're building on a platform that ends up not being or I guess let's zoom this out to all of crypto. If you're building on a platform that ends up not being around in 5 years or 10 years, that failure rate's going to be a lot higher unless you pivot. This is kind of a foundational view for TVP. We have this long-term history with Bitcoin. Our namesake, Dustin Trammell, was really the first person to download Bitcoin Core after the software was released in January 2009. He was a cypherpunk. He worked in the kind of early internet age, and
did he share a message with Satoshi or something?
He did. He shared messages. He submitted a bug fix to Satoshi. Satoshi sent him some Bitcoin as a bug bounty, which was literally worthless at the time. Nobody had put a price on Bitcoin at that point. But yeah, so this crazy OG history. You know, when the block size wars happened in like the 2014 to 2017 period, you know, there was this debate about how do we scale blockchains. Some people wanted to move fast and break things like you do in the startup world using blockchains. They wanted to iterate rapidly with the core protocol. But you know, for Bitcoin, the approach that Christopher and Dustin and kind of the Bitcoin community in general took was, this is our chance at having a base money for the internet. You know, we can't make rapid changes and potentially introduce security vulnerabilities that might mean the end of Bitcoin, the end of, you know, the internet's base money. So go and build another smart contract platform, go experiment, go move fast, break things elsewhere. And in due course, you know, we'll be paying attention and we'll figure out the right way to reappropriate that and bring those large validated markets back home to the Bitcoin stack where they'll live in the long term. And so, you know, when talking to founders in that period, the conversations would kind of be around, you know, I have this thing that I really want to build using crypto, using a blockchain. Given that I can't do it on Bitcoin, what do you think is the next best platform for me to go and build on? And really inherent in those conversations is this idea of platform risk. You know, they know that Bitcoin is the most secure, decentralized, robust foundation. They're not building on it because they can't. They have an idea of what they want to build, and they can only do it on Ethereum or somewhere else. And really over the last few years, those conversations are no longer having to happen, because now these markets that were previously only possible on Bitcoin or on everywhere else in crypto are kind of unlocking one by one on Bitcoin. And when given the choice, we've seen that entrepreneurs, you know, will build on Bitcoin 10 times out of 10.
Interesting. So would you say that you're seeing more founders building on these kind of other, I don't know what you would call them, like L2s than ever before? Like, or are you seeing just still, yeah. So I guess kind of going back to 2015, 2016, 2017, like, does it feel like the same thing is happening again just on Bitcoin now? Or is it more different?
There's been a lot of creative destruction in the broader crypto world around things like people you know, talk about decentralized finance, which it's kind of ironic because you can't really have decentralized finance on a centralized platform. So I think the opportunity is to have decentralized finance for the first time ever truly on the Bitcoin stack, you know, the only real decentralized layer one. But certainly, you know, all of that is kind of quickly becoming possible on the Bitcoin stack. And so I would say, you know, around the layer two question, it's not really about one versus the other. It's kind of the culmination of all of them, because they're all really interoperable because of Lightning. Lightning plugs into various side chains and layer twos that have recently launched or are kind of coming soon. And so the composability, the design space of this overall kind of Bitcoin stack is rapidly expanding. So it's not really an either or, it's just kind of everything together is growing rapidly. And so that's where the kind of entrepreneurs are coming from elsewhere in crypto to say, now I can do this on Bitcoin, I'm not going back.
Right. No, that makes a ton of sense. So let's talk about TVP and kind of like what y'all have invested in the past, I guess 4 years, or I guess since you've been in there. Anything that kind of sticks out, or anything that you're kind of, maybe a founder said, oh, I'm going to go this way, and you're like, oh, and then it turned out being right, or give us some more stories.
Well, I would say, you know, we are well aware at TVP of like the kind of typical dynamic between a VC and a founder, and we try very hard to remain disciplined on not ever kind of like giving advice or direction when we're not coming from a place of domain expertise and experience, because oftentimes in the startup world, you know, what to an investor might seem like brainstorming, just trying to like add value, might end up giving the founder wrong direction, and the founder might think that means, you know, this investor will invest if I do this. That ends up leading to, you know, potentially some poor decision making, kind of like some misalignment between what the investor was thinking and the founder was thinking. It's just, we try to stay away from just giving advice, just kind of like from the hip. But I'm happy to talk about some portfolio examples if that'd be helpful.
Yeah,
I think
that's a really interesting point though, because you kind of hear the opposite with other venture capitalists, where they will shoot from the hip and give you some advice, and turns out it's not the best advice.
Yeah,
so that's refreshing to hear.
I think. Well, thank you. I think there's been, in the last like 10 or so years, a massive increase in the number of VC firms, and they're competing for, deals. And I think one dimension they try to compete on is, adding value, right? Being helpful to founders. And especially when you're an inexperienced venture capitalist, if you don't have the scar tissue, you don't have the years of experience, and or even like a company or business model specific experience, you might, the founder probably knows a lot more about the business and the market and the product than you do, so you might not be necessarily qualified to be giving advice. So that's a company
stuff.
policy.
So let's talk about some of the TVP portfolio companies.
Sure. So I'm sure a lot of you guys in Austin know Unchained. They're down the street. Yeah. We were seed investors out of our first fund in 2019, and we've invested all the way through their last round, Series B, a couple years ago. One that I would highlight that I think doesn't get enough love is Zebedee. I'm sure some of you guys are familiar with Zebedee.
Yeah, Andre is pretty. Yeah.
Andre is awesome. I actually met him while I was still at UCLA. He's one of the rare people who has immense talent, both technically and his presentation, his business acumen. So Zebedee's sort of founding principle was that video games are an area where people are used to having a virtual currency, but it's normally quite siloed. You can't really do anything with it outside of the game. And for folks like mobile game developers, otherwise worthless virtual currency doesn't really do much for user engagement compared to real value. So by integrating, Bitcoin rewards using Lightning, you can now do, micropayments of, 10 sats, for example. Even if it's a very small monetary value, having a real monetary value in the rewards is crazy for mobile game engagement. So some of their customers have stats like, after integrating Zebedee, an 84% increase in average revenue per daily active user.
Wow.
After integrating Zebedee, 1,300% increase in 30-day retention. Stats like this. I don't think I can share their revenue numbers, but they've grown quite a bit over the last 2 years. They're certainly a real big business now, and they've done so a bit more quietly than.
They don't really beat their chest. Yeah.
That's right. Yeah. They have a lot of their customers are game developers, right? So maybe not the average kind of Bitcoiner, but yeah, they're doing some really great stuff, and certainly lots more to come.
That's amazing. Let's kind of walk through kind of like when you look at a deck. Let's go there. What do you scan for? What earns you a deeper dive into it? And is there like any underrated kind of metric that you're looking for, especially like in the pre-seed or seed stage?
Yeah, it's a great question. The kind of first step for us is our investment mandate is focused on Bitcoin native companies. So what we mean by Bitcoin native is the company's building on Bitcoin, and it was founded with kind of the principle that Bitcoin is the kind of global money for the internet. And the success of a Bitcoin native company drives value back to the Bitcoin stack via more demand for the asset, more users, more transactions. So something that's not Bitcoin native is something that says, hey, we're Bitcoin native, but then really when you look under the hood, a lot of the activity is happening on Ethereum or on another platform, which there's actually, you may be surprised, there's quite a few companies that call themselves Bitcoin native. Really, when you kind of peel back the layers, they're not. So that's step one, is this actually a Bitcoin native business? Something that we think is really important at kind of the early stages especially is kind of rigorous hypothesis testing for founders. When you take the jump and become an entrepreneur, focus on you're focused on a specific problem that you want to solve. Some folks have great intuition on where massive markets can develop and where real problems are. But it's really important to validate that your hypothesis about the problem that you're going after and the solution that you're building to try to solve it is what the market actually wants. So talking to potential customers, doing research on the competitive landscape, on the market, on if your product would be valued, that's really, really, really important.
So do y'all look for anything like a business plan or, like recurring revenue or anything like that as far as a tipping point?
So it really depends on the stage of the business. So pre-seed is typically as early as 2 guys and an idea and maybe an MVP. Seed stage is typically you have a product, you have some traction. You're not quite at the point where you can really just sort of build a scalable sales organization and just pour fuel on the fire, but you're almost there. If you kind of look around the corner, you can see that. And that is really Series A, when you have kind of line of sight on, we can build a repeatable sales process and really just scale revenues. So for something like a pre-seed business, existing revenue is definitely not a requirement for us. But if you're looking at Series A, the kind of market norms are certainly such that, around Series A, companies typically have 1 to 2 million in revenue and that sort of thing.
So I did notice that you guys had Founders Fund inside of that TVP presentation and Ribbit. And can you talk a little bit about how y'all help companies get to that next level when it comes to getting past seed stage?
Yeah. So some of these kind of iconic venture firms have started investing in Bitcoin native companies. Typically, maybe not necessarily just Bitcoin, but in broader crypto, you tend to see the biggest names kind of come in towards the top of a bull market, towards kind of the frothy periods. But it's our hypothesis, at least, that Bitcoin native as a sector is going to continue to grow rapidly, and all of these generalist firms are going to catch on. This is one of the biggest technology kind of platform shifts of our lifetime. And so, eventually these folks, there are a lot of really smart folks there at these firms, and they're going to understand what the opportunity set is. So our kind of long-term goal for TVP is really to be a bridge to these iconic venture firms at the later stages. So if TVP is investing in the seed round or leading the Series A round, that should be a signal that these groups, the Excel, Bessemer, Benchmarks of the world, should be paying attention. And so, building our network with folks that we've co-invested with or who are taking a look at our portfolio, that's certainly a big focus for us. So some of our co-investors are groups like Valor Equity Partners, Craft Ventures, which is David Sachs' venture firm, Google Ventures, and a few others.
Nice. I want to talk about the fact that you guys have, like some really interesting, port coasts like Wave Lake. Can you talk about like what was it specifically about that company that you guys liked?
About Wave Lake?
Yeah.
Yeah. Great merch. No,
Definitely great merch.
They do have great merch, but that wasn't what
Yeah.
what brought us to the investment.
I got it.
Yeah, I mean the music industry is kind of from the outside, it really seems like it's not in a healthy place for artists specifically. Sam Means and Michael Rhee really experienced the problem firsthand as musicians. Sam's actually won some Grammys as a producer. He also had a prior company called Hello Merch that handled a lot of the merch for smaller musicians, indie bands.
Yeah.
It's a great network in the music industry, and they saw firsthand how difficult it is for artists to kind of make a living. You have to have millions of plays in order to actually focus on music full time, really. And you have to be making a lot of money on merch and touring and that sort of thing. You really can't appeal to a very niche audience, have 1,000 or 10,000 really diehard fans and make a living 100% as an artist, because a lot of the money is flowing to record labels and distributors and that sort of thing. So with Wave Lake, they really built kind of an RSS feed for music using Nostr on the back end with Lightning payments kind of built in natively. So you could do things like send direct Bitcoin payments to an artist as sort of like a like or a tip or a thank you, or as a way to sort of rank your comment to the top of the list. And there's a lot of interesting things you could do with that paradigm. And WaveLake, the platform they built is one interface on what is kind of the bigger innovation, which is their underlying infrastructure that they built that anyone else can actually plug into as well. And that kind of creates this open competition for music players and that sort of thing. So it's a really big, bold mission. We backed them at the very earliest stage, and certainly, big cheerleaders for them along the way.
It's a really cool company. Every time I see them, I'm just like, man, it's so cool.
Yeah.
I just had that more question for myself.
It was really kind of inspiring to see. I don't know if you followed the story of Ansley Costello a couple of years ago.
Yeah, just talking to her a few times. Yeah.
She's great. She had dozens of songs, maybe more, across all the classic platforms, and made like $200 or something like that. And then after a couple weeks on WaveLake, she sort of went viral, and people started boosting her and sending her sats. And she very quickly made more in 2 weeks on WaveLake than she made in 5 years with hundreds of songs or dozens of songs across all the other platforms. And believe it or not, of course, became a really big cheerleader for WaveLake, for Bitcoin. She really saw the power of kind of that new paradigm. So that was inspiring to see. Hopefully, a lot more cases to come.
Yeah, absolutely. I had another question, just more about the AI stuff that we're seeing here in Austin, because it's definitely taken off. How is TVP looking at it as far as like the AI and Bitcoin intersection, and is there anything that you could share that what you guys found?
For sure, this is kind of a hot topic right now, that there's some kind of interplay between Bitcoin and the rise of AI agents, foundational models. We've actually invested in AI companies prior to our dedicated Bitcoin native mandate. We started that dedicated mandate with I think it was the first fund series focused on Bitcoin native companies in 2021. We've been investing since 2014 in the startup world. We've had even some exits across AI companies. And we really, the pre-Bitcoin investment focus was areas that we thought would be converging with Bitcoin kind of in the longer term. So we had some applied AI companies. It's actually a great segue to talk about our latest portfolio company. I don't know if you saw, we announced last week. You guys may know Lyle Pratt. He's a builder here in Austin, founder of Vita. We led the Series A that got announced last week. Vita is actually building what they call the AI operating system for businesses, the AI agent operating system for businesses, focused on all sorts of business communications. So voice, SMS, email, chatbot, you name it. Plugs right into existing telco standards.
And he has experience in that, doesn't he?
That's right. Yeah. It's actually a really amazing team. There's 3 co-founders, and in different combinations of 2 out of the 3, they have built and sold companies together. And so one of the co-founders, Noah Hayes, was Lyle's college roommate. They built a startup in college. That was actually more in kind of the gaming industry. Lyle ended up building a great company in the telecom industry. It got acquired by a public company at the time called Intelliquent. And he met the other co-founder, Brandon Robinson, at Intelliquent. Brandon's company also got acquired by Intelliquent, and they ended up launching really big, successful products for Intelliquent. They got taken private, taken public again, very experienced operators. And you may be wondering kind of what is the Bitcoin angle here, right? It's got to be a Bitcoin native company. So first off, all 3 co-founders are Bitcoiners. One of the founding principles of the business was, in this future where AI agents are playing a big role in how businesses communicate with each other and with their customers, a credit card or a bank account, these are just kind of incongruent with the speed that AI agents operate on. They're all going to be using Lightning Network rails. So they built all their AI agents from inception to speak Bitcoin, speak Lightning. If there are other assets floating around on the Lightning Network via Taproot assets, they'll be ready for that. So they're serving a lot of customers today who don't know anything about Bitcoin, don't care about Bitcoin, but when the market's ready, they'll be able to turn that on and we think win a lot of business from it.
Yeah, that's interesting. So it sounds like there's definitely stuff that you guys are looking at as far as AI, but it's more on the infra stuff. I would imagine more on like the lightning side of things. It sounds like.
So for AI agents who are operating at a sub-millisecond speed, even a few seconds is kind of an eternity, let alone 3 to 5 business days to do an ACH transaction. And so a bearer asset like Bitcoin over instant settlement rails with really, really low costs like Lightning really seems like the kind of perfectly suited asset and transaction method for AI agents.
Cool.
So that's a big theme. I mean, like I said, we talk to each and every Bitcoin native startup founder, so we're not necessarily going into the AI space separately from Bitcoin. It's always from a Bitcoin native framework.
Interesting. Is there any? What do you think about all these kind of AI data centers and some of them being Bitcoin mining infrastructure plays? Like, what do you kind of see there? Is that a real thing happening, or is it like not so much a thing?
Yeah, I mean, listen, I'm no expert on AI data center operations, but there's a lot of kind of debate and talk right now of about whether or not that we're overbuilding. These foundational model companies are spending like crazy, talking about to the order of trillions of dollars in data centers. If there is an overbuild, a lot of kind of abundant data centers with lots of compute available, that seems well suited to be turned into a Bitcoin mining facility until the AI demand picks back up. So I'm not super deep in the weeds in that world, but definitely interesting to watch. I think the interplay between Bitcoin, the grid, and AI HPC has been pretty fascinating over the last 5 or so years.
Yeah, cool. I kind of want to open up to everybody else, but do you have anything else you want to touch on before we move on to questions from the audience?
Yeah, I think just some general advice for founders that we do like to give, and I've definitely seen from my experiences, when thinking about things like round size and terms, valuation, a lot of founders kind of early on in their company's journey sort of get hung up on like a vanity metric valuation at like a pre-seed or a seed stage. Whereas if someone were to acquire the business at that moment, let's say you raise a pre-seed at a 10 million post-money valuation, they're not going to pay 10 million for the business. There's no revenues, so that valuation, it's not arrived at because that's kind of necessarily like the true underlying value of the business, but it's more so about the amount of dilution that you're willing to give up and the amount of money you need to kind of validate your hypotheses, kind of hit some milestones and get you ready for the next venture round. So, when thinking about terms for a round, really I would suggest you think about how much money do I need for a certain amount of runway to validate this hypothesis, and how much of my company do I want to sell, and bring on the right partner in the process. So. That's kind of a useful framework that I would suggest.
Great advice. All right, we're going to open up to the room. Anybody have any questions? Yeah, go ahead.
Why would people claim that they're Bitcoin native if they're not actually using Bitcoin? Like, how does that work?
Yeah, it's a great question.
Thank you.
I think Bitcoin, it may not seem so as a Bitcoiner when you try to convince your friends and family about Bitcoin and they say they think you're crazy, right? But Bitcoin actually has a really strong brand, and it sort of has this halo effect on it. People know there's something there with Bitcoin. It's a multi-trillion-dollar asset, right? They hear be your own bank. They hear about decentralized finance, things like this. I feel that groups will try to kind of like grasp on to that halo or kind of ride the enthusiasm and the wave of Bitcoin, what's really happening, this kind of platform shift that is Bitcoin, and say, hey, we're doing that too, to try to get attention. But in practice, they're actually using another platform, or maybe they have they're funneling money to their token, which is really, just a way for them to stack some more Bitcoin.
So do you get embarrassed like when you find out, or like how does that work?
Oh, we don't take the approach to go and try to, accuse them of anything. It's just, we kind of bow out of the conversation and just let them know it's not a fit for us.
Cool. Any other? Oh, Ben.
Yeah, what are some common like founder characteristics that really stick out as like failure?
Yeah, I think a common, it's a great, I love that question. A common,
Not showing up to
kind
the
of
meeting, maybe?
Yeah, that's a bad sign for sure. Well, a common kind of misstep that founders make in the startup world, Bitcoin is no exception, is taking this approach of, I have this idea, it's genius, the market's gonna love it, I'm just gonna pour a bunch of engineering resources into it, and then once I build it, the market will come and everyone's gonna love it and it's gonna be a hit. Gosh. And in some cases, you see founders pour years and millions of dollars into building their pristine product without doing any testing along the way to sort of validate their hypotheses, coming back to that idea. So having that framework of I think this is true, but I need to validate it, let's get empirical about it and test with the market, is really, really important, because you see hundreds of companies kind of fall by the wayside because of that. And once you do it, if the people don't come once you've built it, then you've promised your investors, you promise your employees that they will. That's a bad look, and it can be difficult to recover from.
Great question. Keon.
How does TVP feel about founders with preferred shares?
Founders with preferred shares.
Do you guys have a position on it?
Well, explain what a preferred share is, if you don't mind, Zach, because maybe the room doesn't know.
So your framework for thinking about company equity could be, could come from your experience investing in public equities and think, I buy one Apple stock, that equals other Apple stock. Especially for private companies, it's typical to have multiple classes of shares, each with different kind of rights. These can be, preferred shares will have first claim on the company's assets if it gets, if it goes to Chapter 11 or if it gets sold, and also in venture rounds, especially later rounds, it's common for there to be additional kind of rights given to preferred shareholders. Something this brings up that I figure I'd share is when early rounds get really cute with a lot of different terms that are especially beneficial for early investors that are kind of very far from what the market terms are. You can look up the typical term sheets, like a typical seed term sheet. I think YC has a good site with some helpful resources there. That ends up being a big red flag for future investors. If they're like, wait a minute, there's a lot of weird terms in here. What are the early investors kind of thinking? And we might need to come in and clean this up if we feel really strongly about the company. So, I think that's probably more of a question for TVP partners on the founder preferred side. But I think if I were to offer any advice, it would be to keep things pretty simple, standard, at especially the earliest stages, just to not introduce any unneeded complexity.
Great. Christopher.
Curious how you guys think about exits when you're evaluating a potential portco. Like, do you need to visualize a path to an acquisition, going public? How do you think about all that?
Yeah, good question. I think it'd also be helpful just to zoom out and talk about venture capital incentives in general. A lot of companies, most companies in fact, are not really a fit for venture capital investment. VCs are kind of a unique type of investor where they're getting paid by their investors to build a portfolio of really, really high risk, high potential return assets. And so, if your vision for your company is not to be, multi-$100 million type of business, it may not be a fit for venture capital. And VCs typically have a life of their individual funds of like 10 years or so. So that's about the time horizon that they're thinking At the earliest stages, you typically see set 5 to 7 years from like a seed round or a Series A to exit. That's typical, but those timelines are actually getting pushed out farther and farther right now in kind of the state we're in right now with kind of the M&A environment, the IPO environment. So this has actually caused quite a big liquidity problem for the entire venture capital sector because VC investors are not getting returns from their VCs to then recycle into new venture funds and new managers. So there's actually a major kind of dearth of liquidity right now. Part of that is because of the FTC and the previous chairperson there and the posture they took towards acquisitions. Part of it is compliance requirements for public markets. There's a big kind of macro story there. Prior to the dot-com bubble, the standard for venture capital was actually, the top VCs were underwriting a Series A with 3 years or less to IPO if everything went right. Now that sounds crazy, right? Kraken, for example, we participated in the Series A in 2014. They're still not a public company, right? So I think exits are definitely something that venture investors are thinking about, but they're thinking on that 10-ish year time horizon.
Do you think that'll extend even further now? Like if these new venture capitalists get spun up, do you think they'll have to push back 15, 20 years? Just because of everything seems to be moving that way. Everybody's keeping their company private, even Elon's doing it, right?
I certainly hope not.
What are the ramifications of that, I guess?
Yeah, I think it's actually a really unhealthy kind of paradigm for capital markets. As an individual, like retail investor, you can't get exposure to the best companies, right? Because they're not going public until maybe they're at 10 billion in market cap or over $1 billion in revenue, and maybe these large crossover funds have hoovered up a lot of the value and all of the growth. And then once the growth has subsided, they decide to sort of dump on retail by taking the company public and selling their shares then. Whereas something like prior to the dot-com bubble, like I explained, these companies are very early stage and have lots of growth ahead of them that the retail investor gets to participate in. Like I think Amazon was, $5 a share or something at kind of the dot-com bubble lows, or I guess the post-dot-com bubble lows. You just don't really see. That was pre-split, yeah, exactly. So what was it, a 10-to-1 split? I forget. So it would.
I think it's 1 to 20.
Yeah, there you go. And those stories just don't really exist in kind of public markets right now. So certainly something that we are hoping to play a role in kind of restoring to the long-term norms. Hopefully more to come on that front. But it's certainly a problem and something we think about a lot. It's actually an existential risk for venture as a whole. So I think early stage VCs should really be thinking about kind of rolling up their sleeves and trailblazing a little bit, taking companies public earlier than is typical today.
Really?
Mm-hmm.
Wow, interesting. Yeah, go ahead.
Do you think that Texas Stock Exchange might play any role in that?
As a native Texan, I certainly hope so. I think yeah, I'm actually speculating here. I'd imagine that's one of the founding principles of the Texas Stock Exchange because existing exchange requirements like NASDAQ and New York Stock Exchange are not necessarily catered towards early stage, high growth companies. And there's also a lot of kind of compliance requirements and stuff like that. So I hope it can play a role. I know some of the folks at the Texas Blockchain Council are involved, and we certainly would love to bring more companies to Texas and the Texas Stock Exchange.
That would be really interesting. Yeah, go for it.
Do you guys encourage or require holding Bitcoin on the balance sheet for these newer companies?
Yeah, so this is an interesting question for sure. That sort of framework that I was offering earlier about how to think about round size, you want to have some kind of constraints as a founder to keep you disciplined, right? And if a founder approached me and said, I'm raising $1 million, I need 250K over the next 2 years, and then I want 750K to put into Bitcoin. It's like, the question I would ask myself is, well, why do you need $1 million? It sounds like you need 250K. So our investors aren't paying us to buy Bitcoin for startups, right? And if your ideas don't work out, the hypotheses get invalidated, you might end up just looking like a Bitcoin holding company, which is not kind of what we're all here for, right? So
That's interesting. Yeah, because you hear other venture capitalists in the ecosystem say different. So it's interesting to hear that.
What I would say is, I think for like a high growth, high margin business, Bitcoin as kind of a treasury asset is extremely powerful. If you look at a public company putting Bitcoin on the balance sheet, previously to return capital to shareholders, you had two options: share buybacks and dividends, right? Both of those kind of have their own flaws, but if you divert some portion of free cash flow to accumulating Bitcoin, what you're doing is sort of levering your existing free cash flows if you're able to hold it for 5 or more years, and the increase in enterprise value that you get from the Bitcoin is a new way to return capital to shareholders. So I think it's extremely powerful, but where I was kind of focusing, my answer was more around kind of the very earliest stages of a startup, where you're really thinking about building product, finding product market fit,
Get to the next
and that sort of
milestone.
thing. Yeah, exactly. Whereas just accumulating a big Bitcoin treasury just for the sake of it might end up becoming a bit of a distraction.
Hindrance.
That as well. Yeah.
Yeah. Go for it.
If I'm a crypto dev and I'm interested in building like a stable coin or tokenizing a real world asset or some kind of innovation at the frontier of crypto right now, what's the argument for doing it on the Bitcoin stack and not on Solana or ETH or some other thing?
Yeah, great question. What I hear the most from founders, and it feels like every week I meet someone who comes from somewhere else in crypto and says, they tell me their story. I've been in the Ethereum world for however many years, and once I saw that I could build this on Bitcoin because of this L2 or because of this, because of the Taproot upgrade or whatever it was, I realized that this is where I'm building. This is where the opportunity is. Really comes back to that idea of platform risk. If you're an entrepreneur, you're going to be pouring 10 plus years of your life into a business, blood, sweat, and tears, no guarantee that it's going to work. You're taking on all sorts of risks. There's a high opportunity cost that you're kind of foregoing with your existing career. If you don't have to, you're not going to take the risk of the platform that you're building on shutting down or introducing changes to how it functions that all of a sudden might bring new risk to your business. If you don't have to, you won't take those risks because they're additional risks that might mean the failure of your business, right? So there's a real entrepreneurial gravitation towards building on the most secure, the most robust, and the most decentralized platform, which is obviously Bitcoin.
Great answer. Go for it, back there.
So for any of your guys' companies, are they worried about the whole dots first core opportunity size debate because you're building on Bitcoin, or is that not a concern?
I haven't heard any concern on it from our founders. I
feel like that's more like backroom type of developer talk.
Yeah, I think it's kind of an open, it's a free market kind of question. Folks who want to run one version of Bitcoin Core can run that. Folks who want to run another can run that. And at least so far, that debate is not, resulting in any meaningful change in kind of like the market size for certain Bitcoin applications, that sort of thing.
Yeah.
I should also mention we have a company policy at TVP not to ever weigh in or back certain changes to Bitcoin Core.
Oh, interesting.
We don't want to be influencing the direction of Bitcoin Core. That's certainly not where our edge is. That's not where our expertise is. So it's important for us to know where the market's going, but not do anything to influence it or pick a side.
Yeah, because potentially you guys could move a whole ecosystem in town, potentially. I mean, yeah, that makes sense.
Maybe so, or even to be seen as doing that is not good.
Yeah. Sam.
Okay, great. So since you don't support like super PAC psyops for core versus not, but you, the second part you said was understanding momentum
You know,
I don't even think you can answer that, right?
I can't really comment on that. I, as an investor, have a fiduciary responsibility to my LPs, and you know, want to maximize returns for them.
Yeah.
You can get the max return. You go now.
He's just making a joke. Austin, go ahead, Austin. Save us, Austin.
I had an initial question about Bitcoin dominance versus crypto, and like comparing versus investments. But that was literally like the first slide in your deck, so you kind of answered it. But now I want to know why. Why do you think? Why is Bitcoin at 60% dominance, which is like, this is where people are putting their money at in one sense, or a lot of people, versus where people are investing. We're at like, what, 2, 3, 4% of dominance versus all the crypto investments. And for me, where I experience this is I work at Voltage, and we do Bitcoin infrastructure. I talk to the biggest fintech and crypto companies, talking to them about Bitcoin infrastructure. And it's hard to get prioritization for Bitcoin. And for me, I'm like, this should be obvious. You all are a crypto native company. You should have kick-ass Bitcoin infrastructure, be at the cutting edge of that. But it's an argument always to prioritize Bitcoin over crypto in this one area, but in this other area, the main area that matters, Bitcoin is dominating. So how do you make sense of this paradox? Do you see
For
this?
sure. Yeah. Well, the Bitcoin dominance, it gets back to the idea of Bitcoin's halos. Bitcoin is clearly, you know, the most used, the most adopted asset. It's kind of the whole point of all this, right? But the kind of startup opportunity on Bitcoin is much younger than startup opportunity on crypto. Really, Bitcoin native as a category has only been possible in kind of a dedicated fashion for the last 5 or so years.
Yeah.
It was really, you know, SegWit was a technical prerequisite to the Lightning Network. That brought, you know, all sorts of newfound business opportunity, like Voltage, for example. And then, you know, the Taproot upgrade in 2021, we're still seeing kind of newfound composability, newfound opportunity as a result of that. One of which is Taproot Assets Protocol on Lightning Network. If it'll ever come, if Tether will ever issue on the Lightning Network, that ought to be a pretty massive kind of shift. You know, they have trillions in volume on platforms like Tron, Ethereum.
And they're just leaving them there until they
Yeah,
move
but
over, yeah.
Paolo actually said in Vegas that the Lightning Network, he called it out, you know, being not being kind of a global consensus network, not having a global state, not being a blockchain, it's actually perfectly suited to inherit the kind of stablecoin-like payment opportunity from platforms like Tron. You know, when you follow the kind of stablecoin flows over time, they go from one platform to the next cheapest to the next cheapest, but they're all blockchains, they all have a fixed block size. They're not really meant to handle those types of payments. They're not meant to handle hundreds of millions of payments and, you know, trillions in volume, but, you know, a network like Lightning sure seems well suited to. So yeah, hopefully that answers your question. It's really a lot earlier. There's a lot more kind of building to be done. I think about it like sort of an unraveling opportunity set as this platform that is, you know, Bitcoin gets built out, as infrastructure pieces like, you know, as Voltage gets put in place that allows companies to deploy and scale applications on Lightning, interface with the network much cheaper, much easier. That might allow new consumer-facing apps, you know, later kind of down the line. So as these pieces get put in place, there are new pockets of opportunity that emerge as a result.
Yeah, I never thought of it like it's just starting at 21 or 20, and then it's kind of going this way. Never thought of it like
100%.
that, but yeah, that actually makes a lot of sense.
Yeah, if you think about some of the kind of Bitcoin scaling platforms, side chains, layer 2s that are out today, 5 years ago,
They didn't
maybe
exist.
none of them existed. Except Liquid might have been around at that point. I think the Bitcoin stack, as it will kind of solidify in 10, 20 years, it's going to look way different than it looks today. It's still quite early in the
you're actually
build-out.
going to think that there will actually be more Bitcoin native companies here in the next 5, 7, 10 years?
Absolutely. This is a you know,
Where's this
massive,
blog post, Zach?
I think it comes down to our research. If you look at the data, you
Yeah.
can see, you know, kind of the
That's
massive kind of
interesting.
breakout story in Bitcoin.
This is the bullish thing I've heard all month.
Oh, the startup activity is going to continue to grow, 100%. Yeah, there's no doubt in my mind about it.
Cool. Jack, go for it.
Yeah, you touched on Wavelake. I'm curious if you have any other thoughts on like Noster applications that you're interested in, like the primals and Thomases of the world, and then other Noster use cases that are more niche or haven't really scratched the surface yet.
Yeah, you know, when I was an intern, sort of like a capstone project that I did at TVP was just a real deep dive on Noster, who was building, what is kind of uniquely enabled by it. And you know, at the time, a lot of the interest was around sort of like the Twitter clone, kind of like open, you know, Twitter client. You can have competition on the UX side, on the algorithms and stuff like that. I think where Noster has proven to be most useful so far is really as kind of this open distribution network that groups like Wavelake have used, that anybody can plug into, anybody can interface with. It's very simple, it's very easy to build on. Something that came out of Noster that I think is really powerful is the idea of the zap, you know, where you could send value in the form of, you know, sats over the Lightning Network as easy as, you know, hitting a like button, or just tapping a button, tapping send. That feels like something that is going to be around for a while, whether or not it's Noster or another platform, another protocol. That kind of value expression, kind of in a similar way to how powerful Zebedee is with giving real monetary rewards to users, that just feels extremely powerful, extremely satisfying. If you've ever done it, you do a post and you see 100 sats come in. It's like, it's so engaging, it's so satisfying. It feels like that's something special that Bitcoin and Lightning uniquely enables, and it's not going to go away.
Yeah. Okay, I think that's all the questions that we have. Zach, thank you again for coming to Bitcoin Builders Club this month, and we really appreciate you.
Thanks for coming, guys, and thank you, Car, for hosting.
No problem. Cool. Guys, feel free to hang out. We're going to shut everything down in like 30, 45 minutes.